Hello, I'm Jim Cacioppo, the Chairman and Chief Executive Officer of Jushi Holdings, Inc. It has been about 9 months since our Investor Day video presentations that we did on October 1st. If you are newer to our company, I would suggest that you view that presentation on our website. The 9 months since our Investor Day have been about an important period of consolidation, execution, and fortifying our balance sheet. In terms of consolidation, we built a strong retail chain in Pennsylvania and Illinois in late 2019 and throughout 2020. We have continued to build our network of leading industry stores supported by an experienced management team that we have continued to build. Our customer-facing website and technologies are fairly widely regarded by peers and service providers as industry-leading. We serve about 70% of our patients and customers through online menus and pre-ordering. We have customer analytics that we continue to build that inform our branding, promotions, pricing, and consumer loyalty programs. In the past 9 months, we have added 8 new stores to our retail portfolio, and we expect to open an additional 9 to 10 more this year. On the grower processor side, we were fortunate to acquire a grower processor in Pennsylvania at the height of COVID-19 in Q3 2020. We are turning around the operation by beefing up the management team, implementing our SOPs, and really just creating the halcyon gold out of metals effectively. We recently announced that we had commenced phase 1 of the expansion of the Pennsylvania facility and expect to increase the square footage from approximately 90,000 square feet to approximately 130,000 square feet by the end of this year. Additionally, we are in the design stage for the second phase of the planned expansion, which would add an additional 60,000 square feet to the building for a total of 190,000 square feet at completion. In Virginia, we are also very well positioned. We've built a state-of-the-art facility from the ground up and are currently working to match its potential with the right management team and begin selling into the adult use market sometime between now and January of 2024. We initially built out approximately 30,000 square feet of the 93,000 square foot facility and have begun the build out of the remaining space to help meet future patient and wholesale market demand that we expect due to new rules that allow licensees such as ourselves to produce and sell flower products into the medical market, which should become effective on or about September 1st of this year. In addition, we announced in May that we acquired this 93,000 square foot facility and 9 acres of surrounding land for approximately $22 million. With this land, we have room for further very significant expansion opportunities beyond the 93,000 square feet as the regulatory picture develops. In Massachusetts, and following the first quarter, we entered into a definitive binding agreement to acquire Nature's Remedy of Massachusetts, a vertically integrated single-state operator, for a total consideration of up to $110 million. Nature's Remedy currently operates 2 adult-use retail dispensaries in Millbury, Massachusetts and Tingsboro, Massachusetts, and a 50,000 square foot cultivation and production facility in Lakeville, Massachusetts. Lakeville facility's flower canopy encompasses approximately 19,500 square feet, which Nature Remedy expects to expand to approximately 31,000 square feet during the second half of 2021. In addition to the aforementioned expansion, Nature's Remedy is evaluating further expansion opportunities in the existing Lakeville Industrial Complex and or on 10 acres of land owned by Nature's Remedy in Grafton, Massachusetts. The Lakeville facility could potentially accommodate an additional 18,000 to 20,000 square feet of flower canopy through the expansion into approximately 26,000 additional square feet of adjacent space in the existing building. The 10 acres of land in Grafton, Massachusetts could accommodate a 35,000 to 40,000 square foot facility with approximately 18,000 square feet of flower canopy. The acquisition is expected to close in the second half of 2021 and will be the 7th state where we operate cannabis assets and the 3rd state we are vertically integrated. In Nevada, we are also expanding our cultivation and processing facility by connecting 2 adjacent buildings that Jushi owns to create a single production space. The expansion is expected to more than double cultivation capacity. In Ohio, we recently signed a definitive binding agreement to acquire Ohio Grow, LLC, one of the 34 licensed cultivators in the state. The total consideration for the acquisition was $5 million in cash and is inclusive of a 10,000 square foot facility and 1.35 acres of land. Ohio Grow will complement our soon-to-be operational 8,000 square foot state-of-the-art medical cannabis processing facility and moving us one step closer to vertical integration in Ohio. Our store sales growth remains very impressive across the board, while our construction design team is rolling out new locations that will nearly double the size of the retail footprint in 2021. We expect to grow the retail footprint from 15 at year-end 2020 to 34 by year-end 2022 without any further acquisitions. We will likely do acquisitions and add to that total, however. Our stores are really a brand new generation of construction that incorporates the industry's best practices with our own creativity and experience. I think our stores, without a doubt, are some of the most modern and best in the industry. Along with our operational execution on both sides of the business, retail and cultivation, M&A is the 3rd pillar of growth. Jushi's industry-leading growth rate and premium footprint has attracted the attention of many sellers. Jushi is widely regarded as one of the fastest-growing companies of the larger players in the industry. This success has garnered interest from some owners of well-run operations who see Jushi as a preferred acquirer. We are first looking to expand in our states with existing operations where we have room to grow, like Illinois, Ohio, California, and Nevada. And we're also looking at states outside of our existing operations, including Massachusetts, where we recently announced the acquisition of Nature's Remedy for up to $110 million, representing a multiple of approximately 4.5 to 5 times Nature's Remedy's full year 2021 EBITDA and approximately 2.9 to 3.2 times Nature's Remedy's full year 2022 EBITDA. There are some interesting opportunities in other new states like Arizona, Florida, Maryland, New Jersey, and New York. We have a significant history of investing and deal execution in our senior management team and our business development group, and we have over $100 million of cash earmarked for acquisitions. We also have access to further non-dilutive secured debt and sale-leaseback options. I would point out that we have a corporate G&A platform that could support more states, more revenue, and will provide very significant operating leverage, which should drive significant growth in our EBITDA margins. Said another way, we have a management team that can take on more states and more revenues without adding on significant costs. Essentially, we are a platform that is built out to add on significant revenue pieces. We have done smaller bolt-on deals in California like Rover Beach and Palm Springs and expect to announce quite a few more in the coming months. We have raised approximately $122 million in a series of equity deals since October of 2020. We have consolidated our ownership in our very strong Virginia license to 100% ownership and have expanded our grower processor real estate footprint in Virginia and Pennsylvania. The Pennsylvania grower processor purchase also came with an option on a dispensary permittee with 3 stores, 2 of which were already operating. We exercised the option and bought the permittee and its entitlements to 3 stores for $5 million, which was an incredible deal. "2021 will be about regulatory change on the state and maybe the federal level. For Jushi, we have had significant positive regulatory change in Virginia already this year. Specifically, the Virginia legislature added flower to the medical cannabis program and passed legislation legalizing cannabis for adult use. Given these developments, we plan to roll out flower sales in the Virginia market in the fourth quarter, which is expected to drive patient adoption and demand. For example, after flower sales were introduced in Florida and Pennsylvania, both markets experienced a significant increase in patient count and quickly saw flower sales become approximately 50% of the market. I would note that the introduction of flower and the adult use legislation is the fastest and the most dramatic regulatory improvement in a very new medical market. We are preparing for these positive developments by expanding our grower processor and growing our retail footprint in Virginia. We hope to have more than double the size of our grower processor operations this year, while we are preparing more space for an adult use expansion. We expect to open our second store in Virginia later this year and an additional 4 stores in 2022. In Virginia, all of the new stores should be freestanding stores with significant parking. As a reminder, our license in HSA 2 gives us the exclusive right to open dispensaries in HSA 2, which is home to 30% of the population and 5 of Virginia's 10 wealthiest neighborhoods, including Fairfax and Prince William County. We've launched a delivery pilot in the last month for these areas surrounding our Manassas location. We've seen incredible patient demand already, and we plan to expand both delivery hours and radius to serve the larger community moving forward. California is next up on the delivery roadmap. In Pennsylvania, we expect the state government to take up adult use legislation this year, and we also believe there will be adult use legislation as it is widely supported by the Democratic governor and a majority of the members in both chambers of the GOP-controlled General Assembly. We are preparing for this eventuality by quickly opening up all 18 Beyond Hello retail stores and by significantly expanding our cultivation capacity this year and next year. On the federal level, there are many changes that could take place. For example, the companies trying to operate right now have to operate subject to an Internal Revenue Code section called 280E, which approaches confiscatory tax rates. It really hurts the ability of the industry to invest and build businesses. Getting rid of the 280E tax penalty is key. We are not allowed to bank in traditional banks that are federally regulated, and we have limited access to bank credit. Changing the banking rules would allow us to better manage cash, bring down the cost of our capital, and allow us to take credit cards, which has been proven to drive sales. In addition, there is a chance that improved federal laws will allow us to have our stock listed to a U.S. exchange rather than being a Canadian public company, which would be a huge benefit in allowing us to attract a whole new set of investors. How do we manage our business? We built out an initial management team at the top with people willing to roll up their sleeves and do the work. We were not interested in bureaucrats who relied on structures and big overhead to do all the work. We have relied on technology to run a streamlined business from the very beginning. We have had very little turnover at the senior levels, proving that we picked the right people up front. Then we built out the departments underneath each leader, again with very little turnover. We did an acquisition of a cannabis operating team in Colorado that had operated since 2009 in the country's first highly regulated legal market. This filled in a gap early on. We promote the high performers quickly, and we try to find new roles for our most talented and driven leaders. I run their business by creating processes that have checks and balances to reduce errors and increase efficiency with minimal bureaucracy. We have many bi-weekly team meetings where I drill into each state's operation, segmented by retail, cultivation, and construction. We also run things very entrepreneurially in that the organization is very flat and decision-making is very, very quick. My decisions are supported by deep quantitative analysis run by our financial planning and analysis group, which is so important that it reports to one of our 2 presidents, John Barrett. Our financial models quantify almost all decisions so we can understand the risk-reward and payback periods. Our corporate consolidation model allows us to effectively project our revenues and cash flows. As a result, we never came close to running out of money in the dark days of the cannabis bear market. For a young company, we have been able to effectively provide annual and next quarter guidance. Once we have more regulatory clarity in Pennsylvania and announce some of our pipeline of deals, we will introduce our 2022 guidance, which I believe will be a nice catalyst for us. We're constantly adding on many new capabilities like delivery methods perfected by DoorDash and Uber, an online customer experience including a pre-order system that is at the top of the industry, and a branding operations that allowed us to roll out 6 new and relaunch fully architected brands. When it comes to technology and software, we carefully analyze what Silicon Valley calls buy versus build decisions, and we make sure we're really focused on what's core to our business. We choose our technology partners very carefully and enter into higher level collaborative relationships whenever possible. We like to influence features and capabilities. Our in-house UX design team focuses on the frictionless integration of our own systems and our partners' technologies. We develop our own custom digital experiences, ranging from data visualization tools to personalized loyalty programs. We are an organization where the leadership team understands the importance of design thinking and its impact on financial growth. One of our newer initiatives is a systems to set up a warehouse and analyze the data we are amassing. The foundation is really now in place and already driving crucial business decisions. As we grow, we continue to generate new and meaningful data sets, which offer new and compelling insights when connected to our warehouse and visualization tools. This central brain power will power all of Jushi's core pillars, the grow processors, the retail, and the M&A, and promises exciting new possibilities ranging from machine learning to AI. We now have 12 months of digital history with our customers, so we are really starting to understand their preferences and behaviors, and we curate a personalized shopping experience that includes frequent targeted promotions. These regular focused promotions not only drive sales, but also build a loyal and trusting relationship with our customers. Our newly designed rewards program, the Hello Club, goes beyond card punching and into purchase history-based deals for specific customer segments. All of our branding, from the story to package design and the advertising campaigns, undergo significant and extensive consumer research to understand our state-by-state audiences and what speaks to them. On the financial side, we use this data to analyze all facets of our operations at a granular level, growth by product, for example, state growth, in-store promotions, store growth. On the experiential level, we study soundscapes, color psychology, and even scent to create a holistic environment. We aim to create what I call a retail scene, something that transcends traditional cannabis retail, a place where people just like to be and hang out. As we prepare for acquisitions, we look at all available data points like drive-by traffic, proximity, population demographics, income, as well as things like impact of seasonal tourism in the area. This preliminary data collection helps to streamline priorities in business development and mergers and acquisitions. We take a similar approach on the importance of our content production. We still believe content is king, as they say, and invest significantly in producing our own custom content for usage across a wide variety of initiatives. From educational to promotional, from in-house to external, our videos and images are the highest production value and serve diverse touch points such as employee onboarding and learning systems, investor and public relations, lobbying, regulatory education, marketing, and overall company identity. At Jushi, we have implemented the ESG principles practiced by large, more sophisticated companies in the technology space. Our retail store in Culver City, California will be the most environmentally advanced that I know. It will open next year and will be solar powered with charging stations and it will be built like a greenhouse using environmental friendly materials. In Portugal, we are building with a Dutch supplier a glass house designed to utilize the sun to the fullest extent possible. We have sought to have a very diverse management team and board of directors, and although we have more work to do, a look at our website will bear out some fruits of our early efforts. On the social side, we have tried to immerse ourselves into the communities to help the less fortunate and those in need in those communities. A recent example is in downtown Philadelphia, where we rented a food truck to serve 100 hot meals for those living without shelter, and we partnered with 3 organizations, the Solidarity Project, Basic Kindness, and the Joy of Socks, to distribute supplies such as socks, hats, jackets, and hygiene products. Jushi has also supported nonprofit organizations such as Current Initiatives by volunteering and sponsoring multiple events for the Laundry Project, which focuses on assisting lower-income families in meeting basic needs of washing clothes and linens. In summary, in 2020 and Q1 2021, we consolidated and grew a premium retail footprint throughout some of the industry's highest impact states like Illinois, Virginia, and Pennsylvania. We ended 2020 with 15 stores that contributed to our $32.3 million of fourth quarter revenues. We continue to see strength and strong momentum in the first quarter of 2021, with revenues increasing approximately 30% to $42 million. In the second quarter of 2021, we are forecasting revenue of approximately $45 to $48 million and adjusted EBITDA of $4 to $6 million. We expect higher sequential quarterly revenue growth in the second half of the year, driven by the opening of 2 new stores in June, the opening of an additional 7 new stores by the end of the year, and an increased cultivation output at our Pennsylvania and Virginia facilities, driven by our expansion efforts. We have planted the seeds to become a major vertical player with wholesale capabilities in Virginia, Pennsylvania, Nevada, and in Massachusetts with our recently announced acquisition of Nature's Remedy. We hope to become vertically integrated in our other 3 states of Ohio, Illinois, and California. Moving forward in 2021, on the operational side, we will be focused on 3 main areas. The first is same-store sales growth in our company's retail portfolio, which includes our flourishing online platform, which we like to say is our biggest store. Second, we expect to open up a number of new retail locations. And third, we plan to expand our grower processors' output. We will continue to implement data-driven strategies executed by the strong management team we have carefully assembled. In addition, on the M&A side, we will be able to leverage our operating platform to create very EBITDA margin accretive growth for Jushi shareholders. If you're interested in learning more about Jushi, head over to our website and watch our videos covering deeper insights of the business. Thank you for your interest in Jushi.